What side is it on?
All right. Let me see. Let me try to get my screen up here. Bear with me. Can you guys see my screen?
Yes, I can see it.
Okay. All right. Amos, if you can monitor, I'm sorry. Amos, if you can monitor the chat for me. And if we get any questions in the chat, that'd be great, guys. Just put questions in the chat, or you can unmute yourselves if you have a question during this this training. I want to say thank you guys for joining. I have been doing a lot of studying and learning and applying some of these things to my own trading platform and techniques, and they have been very successful for me. So I just really wanted to share this information with you guys. I've been watching a lot of and studying a lot of what Dr. Spiller has been doing. And like I told Amos today, you know, I try to surround myself with people that are doing things at a high level, and I adopt those things within my own personal life and business life. So when Asia was when Asia trains on support and resistance and trend lines, I've watched her video like 3 or 4 times because I believe that she is the best at doing it. When Courtney trains on double tops and double bottoms, I take that opportunity to learn from Courtney. So Dr. Spiller, you know, he's a 7-figure trader, and so he must be doing something right. So I've taken this opportunity to learn some things from him that he trains on. So and it's been, like I said, I've learned from him. I've applied some things. It's been very successful. So I just want to share that information with you guys tonight. I'm only going to take about an hour, if that long. And because I want people to understand. Has anyone on the call been on this training before? Anyone at all? I've done 2 of these. Has anyone caught any of the other 2?
I have, for sure. Obviously.
Yeah, no, I know you haven't. And anyone else? Just respond if you have been on this training before. If not, no need to respond. Okay, so it seems like it's all new folks, so that's good. All right, so here we go. Somebody's up. Please mute your phone. I hear a lot of background. Everyone, please mute your phone.
Hey, Les, you can hit participants and then mute everybody.
Oh, okay. Let's see here. Okay, yeah, that's better. Can you guys hear me? I mean, I guess you guys are muted, so never mind. Just put it in the chat. All right. Well, I don't like muting everyone, Ames, because I like for people to be able to ask questions, but I guess just put them in the chat, and we'll monitor the chat. Okay, so everybody said we're good to go. Okay, cool. So what I want to train on a little bit, first of all, I want to talk to you guys about the spread, because I know in the last session, no one understood what the spread meant. So I want to start there. That'll be a quick hit. So anytime you go into a trade, there's going to be a spread on that pair. And the spread could be a number from 1 to, I don't know, a couple hundred, I guess. So how you calculate the spread is basically, think about the spread, a 10-point spread equaling 1 pip. So whenever you see a spread that says, just say if it's a 25-point spread, then that equals 2.5 pips. So when you normally go into the negative on your trade, that's the reason why you're in the negative, is because you're covering your spread first. And you have to account for that spread before you go into profit. So remember, if it's 10 points, for every 10 points, that spread is 1 pip. So if it's a 50-point spread, that means it's a 5-pip spread. So hopefully that makes sense. I thought that was valuable for me when I learned that information. So I just want to share that with you guys so you would know when you see the spread what that really means. I'm going to try to take everyone off of mute because I like interaction. So, okay. Looks like we don't have any background noise, so that's good. So does everyone understand what the spread is now?
Yes.
You got it? You got it, Asia? Okay, cool. All right. So that's pretty simple. So what I'm going to do is I want to go in. I've been usually going into my trading view, but I want to really I really want to talk about the Harmonic Scanner because I think the Harmonic Scanner is what I've been using to trade with, and it's been phenomenal for me. I don't know if a lot of people even know about the Harmonic Scanner, that it's one of the most popular tools that iMarkets have, and I think it's probably one of the best tools that they have, if not the best. I think for me, it's been a godsend. So I want to share this information with you guys. So I'm going to go into the Harmonic Scanner. You click on the Harmonic Scanner in your iMarkets Live account, and it'll pull up these scans. There's a little short video here. You just go to connect. Hopefully it'll connect. Hopefully hold on. I don't know what's going on. Okay, here we go. All right. So can everyone see my screen on the Harmonic Scanner?
Yeah.
Okay. All right. So what you get here, first of all, I'm just gonna briefly describe what the Harmonic Scanner is, and then we're gonna put some indicators on here and show you how I use this. So basically, the Harmonic Scanner is a pattern. It's a pattern that's either a double top or a double bottom, and it's basically it has a downtrend or uptrend, and it retraces, comes back down, and goes back up. And that's what the harmonics. That's what harmonics are. It's just different patterns in the market that come across over and over and over. And what the Harmonic Scanner really does is it scans the markets for these patterns, and then it populates them for the highest probability trades that you can have. And so it's a great tool. And what I've done since I started using it is all of these different scanning companies on the left hand side here. They all have. So if you click on Forex, click on 15-minute charts. They all have all these harmonic patterns or scans that pop up on a daily basis. The ones to the very bottom are the older scans. The ones to the top are the new scans. So how you determine a scan is you can click on this arrow right here, and it will populate. It kind of refreshes the scans and refreshes the screens. And so it will populate the newer scans. But what I've done was I've gone down through each one of these scans, 15-minute scans, and you can actually check to see how accurate these scans are. So if you look at this one, this is the NC on the 15-minute chart, and you can look at this and you can tell how the scan did. So I went through a lot of scans, guys, and what I'm telling you is, what I'm finding is these scans are about, the ones that I've gone through, these scans are about 90 to 93% accurate. And I don't know if you guys know what that means, but that's huge in what we do. If your scans are coming back 93% or hitting profit, then we're in a good place. For whatever reason, this whole the take profits are not showing up here. I'll see if I can get those back.
Hey Les.
Yes.
Les. Can I ask you a quick question?
Yes.
What pattern do you like the best, or see that's been most successful out of the?
They've been 93% successful, all the patterns that I've used. So there's not one that I particularly care for over the other. I don't know them that well to really know what's different. But I can tell you, let me give you some examples. So on the 15-minute chart, I have a Gartley pattern that hit take profit 3, a shark take profit 3, a shark take profit 2, a shark take profit 1, a Gartley take profit 2, a butterfly take profit 1, a shark take profit 1, a sharp, take profit 1. And that was all within the 15-minute time frame, and none of those hit stop loss.
Mm-hmm.
Okay, so that was 1, 2, 3, 4, 5, 6, 7, 8. That was 8 trades on the 15-minute chart, no stop losses. Okay, when you look at the 1 to 4 hour chart, the butterfly, I have a take profit 2. I have a butterfly that hit stop loss, a bat pattern, take profit 1, a shark pattern, take profit 1, a Gartley, take profit 3, a shark pattern, take profit 3. So on the 4 hour, 1, 2, 3, 4, 5 out of 6 hit profit. So to me, it really doesn't matter. I know some people like certain patterns better than others. I mean, they all are successful from what I can tell. Okay? Tim, does that answer your question?
Yeah, I got you. That sounds good.
All right, great. So again, I can't see the take profits, but I can show you how they put them on here, and I'll do that later. But I just wanted you to know kind of how to refresh your screen, what these over here, you can go to JFAX, you can pull up, 1 to 4 hour, you can go do the same thing. You can click on one, and you can see how it finishes.
You gave me 120, then I took 40, remember?
Hey, Les.
Can you mute your phones, please?
Huh?
Les, I can see your take profit.
You can. I can't see mine.
Yeah, you might need to move something because it's on there.
It's on there. Okay.
No, you don't want no more short.
Well, okay. So guys, look at this. So how the harmonic scanner works is, like I said, it scans this pattern and it gives you an entry point.
Oh.
Can you please mute your phones? Or I might have to mute everybody. Hold on.
Luckily, I'm here to follow my original decision from Candy's side.
Okay, so how this harmonic pattern works is it gives you basically an entry point. You see this entry line here, and it pretty much, based on the other patterns, it pretty much knows that this is going to go back down for a sell. So when it does that, it's going to go back down for a sale. We know we should be looking for a sale. Now, one thing I found about these patterns, at least the ones from last week, is there were only 2 patterns that I looked at in over 20 patterns where it actually retraced at the entry point. Think about that, guys. Look right here. I mean, there's no retracement of the entry point. So that means the way it was supposed to go, it started going and it kept going. I did not see but with 2 trades that actually went backwards. All the rest, so probably out of 20 trades, 18 actually went the way they were supposed to go. So as you're trading, that gives me a lot of confidence that, hey, this might be a great opportunity for you guys to understand that these things are really doing what they're saying they're going to do, and they're hitting profit at a high rate, higher than 80%, which is what I originally thought that Harmonic Scanner was giving me. But that's just my personal experience. And like I said, all of these things are here that you can go through and you can check. And we did that last time. We kind of went through these different scans and we just checked different ones. Okay, that was the first one we just looked at. It hit take profit 3. This one, boom, boom, boom. It didn't retrace. Came all the way up to take profit 2. And you can do this for all of these, and you can test it for yourself. You can see what, you can go all the way down the chart and see how these scans did in the market. This one hit take profit 2. I mean, so again, I've only found 1 or 2 that hit stop loss, and that's because the entry wasn't good. And I'm going to show you how to make sure you have a good entry so you can even avoid those as well. All right, so what I want to do right now, though, before we get into anything else, I want to kind of show you how I set up my harmonic scanner charts. Okay, so the first thing I do is I use these indicators. I use the moving average exponential, okay? Moving average exponential. So you go down here and you find moving average. No, that's not the one I want, sorry. You find moving average. So you click on this button here for indicators. You go down here, and if I'm going too fast, please stop me and I'll slow down. Moving average exponential, and you see the line pop up, and then you go click on this little gear right here. And when you click on this little gear, it's going to pull up your inputs, and you want that to be a 10 line. Okay, 10 to close, and you can make it, I like to make mine just a little bit thicker. You can make it as thick as you want. and then okay. So this blue line becomes your 10, your EMA Exponential Moving Average 10 line. Now you also can put a trend line on here if you want. I don't do trend lines for 5-minute charts because it's trend line, you're scalping at that point. And a trend line really doesn't do much good when you're scalping. So, you know, you can use trend lines on this 15-minute chart. So, so I'll do another moving average exponential, and I will make this 50. And this is to indicate a trend line. So you do 50 to close. Style again, you can pump up the lines, and you can make. I'll make this to say black because it's a white background, and that's kind of your trend line. All right. So what I've taught in other classes, I mean in other trainings, and I want you guys to really see this, is how I've been using my 10 trend line. I mean my 10 exponential moving averages. When a candle, okay, let's take this blue candle right here. When a candle goes and crosses, and I think I learned this from Asia too, so thanks, Asia. When a candle goes and crosses this blue line and closes above the blue line, and then a second candle forms, then you get into this trade and you ride it. Okay, so if you guys can see, this candle closed above the blue line, and then it went up for a buy up until this point. So just say you got into it right here when it crossed and closed and went up for that buy. That's about 51 pips that you would have gotten off of that one move. Okay, you can go through all of these charts and find similar patterns. So let's find another one. This looks like a red candle. This red candle came, it closed. It didn't close here. I'm not saying when the wick closed, when the whole body closes below the line. So this came down, crossed the blue line, the body closed here. You would have jumped in a trade here, and you would have rode this down. Okay. So someone might ask, well, how do you get out of a trade? How do you know when a trade is going to reverse? Well, I'm going to show you on this indicator down here. This was coming down, and you see it made a V right here. When it made a V and started heading in this other direction on a sharp V, that means that it was changing direction. As you can see, it went up for a buy. So you want to use your indicators to tell you what's going on. Here's another one, okay? The candle here, this red candle closed below the line, and then it started a red candle, came back up, turned into a blue candle, but it's still below the line. Still below the line. As long as these candles are below the line, you stay in the trade. As long as this red is below the line, you stay into the trade. Now, Dr. Spiller sometimes teaches like you stay into the trade until the opposite candle breaks the line and closes above the line, which would be right here. But again, you know, when you see a sharp turn, when you see a sharp V, that's a good indication that you can get out of the trade at that point. Okay. So that's rule number one for me is I wait till a candle closes below the line and another candle forms on a 15-minute chart. On an hour chart and the 4-hour chart, I just wait for that candle to close and then I jump into that trade as soon as it closes. And if it's a sell, I'm jumping in that sell. If it's a buy, I'm jumping in that buy because it's a longer time frame and you can do that. So the indicators I put on is the EMA 10 line, I put in the EMA 50 line for the trend line. I put in the RSI, which is right here. You leave it at the default of 14. And with the RSI, and I'll show you how I set this up. I'm trying to figure out how to move these videos. Okay, there we go. All right. So what I do is I come here and I make a horizontal line, and I put a horizontal line at the 70. I put a horizontal line at the 60. Now, it takes some time to set up your charts on the Harmonic Scanner. And one thing I don't like about the Harmonic Scanner is it doesn't save it for you for next time. So you have to do it every single time if you want to do it this way. You don't have to do it this way. Once you start learning this, you'll have an eye to know what the market's doing without even putting these lines on here. So I put my lines on, and like I said, you can do it how you want. I use gray. I use a 10-point font. I put left, and then I start writing out my my charts. I put my coordinates. You go to coordinates, and you just make that 30. Just change it to 30 so it sits right on 30. That's what I do. Okay, so this is your momentum line at the bottom, and then you do the same thing here. That's going to be your 40 line. You click 40. Do the same thing here. Show text, gray. And I want you guys to see this. That's why I'm going over it. So, and these are going to be your sellers. Go to the 50 line. Oh, sorry. 50 line here. Coordinates. You just want to put 50. Again, you go to style, change your color to whatever color you want. Show price. It's going to be your support. Do the same thing with the 60 line. Sorry, I would have set this all up, but I wanted you guys to see this. Buyers, coordinates, just change, make that 60. And then your 70. Style, text. Okay, I'm going to get this all set up. And this will be momentum. All right, so what this is telling me is anytime the price is up here, there's momentum for the buyers. Strong momentum for the buyers. This is all the buyers area, like from here, from this line, this imaginary line on up, are buyers. From this imaginary line from this imaginary line on up, from the support on down are really the sellers, and from support on up are really the buyers. So whenever you see these lines up here, the buyers have the momentum, okay? The buyers are in the market, rather. The buyers in the market. Now I'm going to show you another one that I use, and it's the money flow. So we're going to put the money flow on the chart as well. That's why I like the Harmonic Scanner, because they allow you to put all these indicators on. And you're just going to keep it at the default at 14. And what the money flow tells you is volume. Okay, you know here that the buyer's in the market, but this tells you that the buyer's in the market and there's a lot of volume. Okay, so up here, you have the buyers in the market. Down here, you have the sellers. So right now, so if you look at this present time, the sellers have momentum and they have a lot of volume. So look at this long candle right here. That really indicates exactly what they're saying. The sellers were strong right here, and it had a lot of volume. So that was pushing that long candle down. Okay, so that's the money flow. And then the last indicator that I like to use on this is the directional movement. And some people call this the ADX. On the Harmonic Scanner, it's called the directional movement. You leave the defaults at 14 and 14. You click on your little gear here for format. And what you want to do is D plus. So plus D1 means it's going up. So you put the color that you want for going up. So you can put like green, a green line. You can make it as thick as you want it. I hope that's green. I'm a little colorblind. And then D1 is going down. So you put a red line for going down. And then your ADX is really your momentum. And you can make that whatever you want. So let's say I'll make the momentum, I'll make that like a blue. And you adjust your lines accordingly. You don't have to make them that thick though. And like I said, the inputs are standard, so you're gonna leave those at default. So that's the other piece that I use right there. Okay, so I have my RSI that tells me who's in the market. I have my money flow that tells me the volume of the market. Then I have my directional moving indicator that basically tells me, okay, the greens are my buyers, and the reds are my sellers, and the blue is my momentum line, okay? So how I look at this, so I use all these together. So when you come to the harmonic scanner and just say you want to, now this is obviously going in a buy. So you want to make sure, I like to call these red and green lines, like just think of your red and green, your green line as your daughter, your father, that's your daughter. The red line is a little boy that you can't stand. You don't want them coming together to kiss, because that means the momentum is getting ready to shift to a different, it's getting ready to go from a buy to a sell or a sell to a buy. So you want them as far away from each other as possible. Let me say that again. You want them as far away from each other as possible. Okay. So as you look at this, the chart will show you guys, the chart will show you guys what the market is doing. These indicators will help show you what the market is doing. So look right here. All right, right here, it's going up, it's going up, it's going up to the buyers, where the buyers are having momentum. So it's going up here. Okay. The money flow is moving up as well. Okay. Now these candles are not big bullish candles, but they are pretty nice sized candles. So that's why you see that here. When you see big bullish candles like this red candle, look, it's showing in all the different indicators. So just say you bought this on the way down. This was coming down. You're buying all of this on the way down. You look at that. Look at this V right here. What does that V mean? The market is getting ready to reverse itself. Remember that V. Remember that sharp turn. That tells you can get out of that trade. Now, Dr. Spiller, sometimes, like I said, he teaches sometimes that, once this breaks and the new candle forms, you stay into the trade as long as it's under the line until it crosses and closes out above the line. But then look, you've missed all of these pips. So what I like to do is I like to ride it all the way down until I see a turn, some kind of turn. Look at these turns. Look at all these turns until some of these turns. And then I know if I see it start to turn up, I know I'm going to get out of that trade. And then guess what? You can actually ride the trade up, because you see it turning up. You can ride the trade back up. But what I would do is wait for my confirmation. Okay, I would wait till this line breaks, and then I get in on this line, and then I ride it up until it's ready to come back down, and you see the little sharp V coming back down. So that's how I trade. These. I'm going to pause for a quick second to say, is this making sense?
Absolutely.
Who is that?
Oh, Pam Anderson.
Oh, okay. It's making sense? Okay. So guys, this is the easiest. First of all, understand the harmonic scanner is going to tell you which direction this trade is supposed to go in. All these indicators are going to tell you is when are you supposed to get into this trade. So let's take a look at this one. Okay. Just say it's telling you, okay, you need to get in this trade here at D. Okay. But just say if D was coming back here, if it was coming down and doing a sell. Okay, it started going up and it came back down doing a sell back to your entry, and it was coming towards your stop loss. Okay, you don't want to get in a trade when this trade when it's retracing. You want to get into it when it's actually doing what it's supposed to be doing. So I would have waited until this trade closed out above this blue line, and then I would have got into this trade once this second candle formed. Okay. And then you would have pretty much been safe to ride this up to take profit too. Now, I'm going to say this. The riskiest trade is getting in right here with a harmonic scanner call. So look at, let me see, there are three different types of entries in my mind. What I use is entries. There's what I call the main entrance. If you go to an office building, you go to a hospital, you go to any place like that where there's all different types of entryways into that building, but they always have a main entrance. Okay, this is what I consider the main entrance, this entry point right here. This is what the harmonic scanner has given us. This is your main entrance. Okay, that's one entry. Your second, sometimes there'll be two entries depending on what kind of pattern it is. So if it's a second entry, that will be considered your second entry. So sometimes you might have a second entry point right here. Okay, this might be an entry point. It might have a second one. The third entry would be the rule number one. When that candle goes above that blue line and closes out, and another candle starts, that's when you can get into that trade. So that's the less risky. This is the most risky because it could go backwards. But look, it just went up, it broke, and it kept going up to take profit too. This, like I said, this is the best tool that I've seen. And you look at your indicators. Let me find another one. Let me find another scan that we can look at. Okay, so this is a sharp pattern. You can look at the same thing. Go back and look at the same patterns and the same. Look at this. Okay, so this went up as a sale. It broke. The candle broke. It closed above the blue line, and then it went up to a sale. Now, you probably wouldn't have known to get out of this, but you would have known down here because look at this sharp V, back down. So that's your cue. It's time to get out of this trade, and you could have rolled that trade all the way back down because look what happened here. You wouldn't have got in right here because it's just a candle that broke, right? Here, the whole entire body closed below the blue line, and this candle formed. So you would have jumped in on this candle, and you would have rolled this candle down, and you could have stayed in this trade to here, where you see this sharp, again, this sharp V, because you know it's going back up. And you could have used your indicators. Sorry. Cancel. Come on. All right. You could have used your indicators to show you this. But as long as, remember, part of this rule is when it's below the blue line, you're looking for sales. When it's above the blue line, you're looking for buys. So you could have rolled this down. You could have said, hey, it's a little V. It really is not giving me a lot. I'm just going to stay in it. You could have stayed in it until you saw this like quick turn right here, and then you could have gotten out of that. Let's go look at some more. I want you guys to see this because this, when Asia first taught this about the crossing lines and closing of candles, I thought this was very powerful for me. So look at this. This candle comes down and closes below. You're in a sale. Okay. You see a little quick V, and then it starts moving back up. You're in a buy. You can do this all day long. It's the same pattern. Now there's a few that might fake you out a little bit, but for the most part, you'll be in good business by doing this. Let me go find one that's a little more pronounced. This was kind of ugly. All right, so look at here. The wick closed below the line, but this red candle closed below the line. You got in right here. You rolled this down. You rolled this down to here. How did you know it was going to go back up? Look at this V down here, guys. It's giving you everything you need on the RSI. Look at that V. Look at that V. Let's look right here. This blue candle, the wick only broke, but this one broke above. You got in right here. You rolled it up. You rolled it up. You rolled it up. Uh-oh, it's getting ready to come back down. How do we know it's getting ready to come back down? Because look at that V right there. So, I mean, if this is too easy. This is almost like cheating. And so here's something else I want you guys to realize. Okay, so you got your lines right here that tell you who's in the market. You have your MF, your money flow index. But here's something else I want to show you guys. So what I also do is I put a 20 line here, and I put a 40 line here. Okay, so let me go ahead and change just to make sure it's on 40 coordinates. Just go back, remember, go back and just put 40. And you want to do the same thing for here. You want to put 20 for this one. Okay, you got a 40 and 20 line. When the buyers and the momentum, you want the buyers and the momentum above the 20 and the sellers below the 20 for in this trade. So that's what you want. So you see this buyer is above the 20. The momentum is not quite there yet, but the seller is below the 20, and they're going in opposite directions, just like that little boy and that little girl I told you about. So look what's happening here. The sellers are going up. Remember, look at this. Look at your RSI. The sellers are in the market. The momentum is pretty high. Anything over 50 is where you want your momentum to be. The momentum is pretty high. And look down here. The sellers are moving to, you want the sellers to eventually get over the 40. But the sellers are moving up to the 40 and the buyers are moving below the 20. Only thing else you want, and you'll be in a perfect trade, is you want this momentum to go up along with the buyers, and you'll see these candles start to grow and grow and grow and grow. Does that make sense? I'm gonna pause there because that's important. Does that make sense, everyone? Someone talk to me. Oh, you guys are muted?
I'm on the fence. I'm not quite sure. Can you just do a little recap right fast?
Okay,
Yeah.
what do you want me to recap?
That last portion.
Okay,
Yeah,
the last portion.
I kind of understand. Yeah.
Okay, no problem at all. Okay, your red line here are your sellers. See that? Can you see that? Hello?
Can you hear me?
Yeah, I'm with
Can
you.
you hear me?
Okay, no, I couldn't hear. Okay, so the red line are the sellers. You guys get that? The green lines are your buyers. Okay, you want your buyers, you want your buyers or your sellers, you want them to be above the 20. They go both ways. Okay, look, okay, so they go both ways. And when they cross, what that means is they've kissed and it's getting ready to change what it was doing. Okay, so look at this. So it started down here. What are the buyers doing? They're going up over the 20, right? You see that?
Right.
Okay. What are they doing here? They're going up, right? What is the RSI doing here? It's going up into the buyers having momentum, right? What is the money flow doing? It's moving up as well. So you see, look right here. You had the sellers coming down, okay? Look, the sellers are coming down and they cross right here. When they cross, that means they were going to change positions. The sellers were going to become buyers and the buyers moved up, the sellers moved down. And then it happened again. Look, they crossed. What happened?
Right.
Sellers came down. Went up and the buyers came down below the 20. And the sellers moved up above the 20. Now you still don't have momentum. So don't let the momentum line fake you out. If you can use the momentum line, if you can lose it if you're not comfortable with it and you just want buyers and sellers. I just like to know how strong the market is. The momentum line and the cash and the money flow line kind of tell me that. Now you don't have, if you got the money flow, you really don't have to have the momentum. But again, you want these two moving away from each other. So the higher this green line gets and the higher this line gets, you want to stay in that trade because the buyers have momentum. And the buyers are way up here. And so, and if the sellers are way down here, they're far away from each other. You want to stay in that trade. It's only when they start turning towards each other and moving towards each other that it's time to get out that trade. But also you have indicators here. You have a V, you have a V, you have a V. You have all these Vs that tell you that it's changing.
Okay.
Okay?
Makes sense.
Makes sense. It's pretty, once you look at these a while, I can take these lines off right now and I'll know who's in the market. And I'll be able to say, okay, the green line, I know the green line and the blue line are above the 20 and I know the red line is below the 20 because I know where the 20 is. But that's going to take time. You don't need momentum on here. I'm sorry. So forget about this right here. This shouldn't be on here. So I didn't change the setting is all. Yeah, and I don't know how to do that. But don't worry about this momentum right here. That's not supposed to be on there. Only supposed to be up here. So let me see. Let me find another one. Trying to find some good. Now, one thing also that I want you guys to understand is we don't trade what we call streets. This is a street. This area right here is a street. It's going side to side. That's consolidation. We don't trade street. We trade stairs. This or this. We don't trade side to side. We only trade stairs. Okay? So make sure when you see, look, like I'm gonna show you an example. When you see all of this like this, all jumbled up, you don't want to trade that. You want to trade where there's some open spaces. That's where you want to be trading. You don't want to trade when it's all jumbled together. See all that? That's consolidation. Look. You don't want to trade when it's side to side like that. You don't want little movements like that. So that's just a tip. So how do they determine the take profits? Okay, so what they typically do, let me find a good scan here. Let's try this one. Oh, that's ugly. All right, let's try this one. So anybody ever heard of Fibonacci? Y'all know what Fibonacci is? Okay, so Fibonacci is over here. You go to this little pitchfork thing and you go down to fib retracement and you click on it. And so what you want to do is you want to position your Fibonacci from the previous swing high to the previous swing low or reverse, depending on the way the market is moving. So this is the previous high. This is the previous low. So you want to take it from here. You want to right click it and you want to drag it down to your previous low, which is at the very bottom where this D is. And you want to set it there. Okay. And I don't know how well you can see these, but okay. So what they do when they do that is they say, okay, we're going to put the take profit. They're going to put that at the 38% retracement, which is right here. They're going to that's take profit 1. Take profit 2 is going to be at the 61.8, which is right here. And take profit 3 is going to be at the 100%, which is up here. Can you guys see that?
Yeah.
That's how they determine what the take profit 1, 2, and 3 is going to be. They use the Fibonacci retracement. And see, all I did was put it on there. Take profit 1. Look across this take profit 1 line. It's exactly on the 38.2. Look at take profit 2. Go all the way across this take profit 2 line. It's exactly at the 61.8. And the take profit 3 is exactly at the 100%. So what this is saying is,
I'm sorry. The 60. What's the numbers that you're getting? The actual one. The take profit numbers is what the Fibonacci is telling you.
yeah, that's on this scan. They use the Fibonacci retracement tool to determine the profits, where take profit 1, 2, and 3 will be. Okay, so they take the previous high. So if you go back to this, the previous high, this is the highest point on this last move down here, right? And this is the lowest point. So they take the previous high and the previous low, and they put the Fibonacci retracement on. That's a little more advanced, but I just wanted you guys to understand how they come up with take profit 1, 2, and 3. So what this really means is, okay,
what are the 3 take profit numbers again that you mentioned?
38.2 retracement, 61.8 retracement, and 100% retracement.
Thank you.
Okay, so look at this. It started off here as the high. It came all the way down here to D. So it started at C and it came all the way down to D. Now think about this. Let me show you something. If this goes all the way back up to C, it retraced 100% backwards. So this is the same distance as this. Does that make sense? This is a little advanced, but think about it. Okay, if you measure this and you measure this, it'll be the exact same measurement. So it's 100%. So it went all the way back to where it started. Does that make sense?
That makes sense.
So that's 100% retracement. Okay. Now, if it came back to this 38.2, that's a 38% retracement. Because it only retraced at about a third of where of 100%, right?
Gotcha.
Got me? Okay, then if it retraced back to here, that's a 61.8% retracement, which is about 2/3, and then all the way back to 100. So I just wanted you guys to see that that's how they determine where they're going to put their stop loss, take profit, not the stop loss, but take profit 1, 2, and 3. How they determine generally where they put their stop loss is they generally put it right below this previous low over here on this X. Another thing that I want us all to understand is when we're using a harmonic scanner, we can move our stop loss. So see how this has 2 entries? I talked about that the first time. This is the main entrance, and this is the secondary entrance. And then you could also get in. So the main entrance is going to be the most risky entrance. Why? Because this could easily, if this came down all the way down here, it could easily retrace to your stop loss. Okay. Your secondary entry is less risky because it's higher above your stop loss. And then the least riskiest option is when this breaks above the blue line and closes, which it did, then you can get into this trade. It's doing a lot of retracing before it started to go up to a take profit 1. But that's the rules. Your main entrance is the most risky. The secondary entrance is the least riskier than that. And then you want to follow your rule number 1 of when this candle closes above the blue line, then you would generally enter that trade. But this must have been around the 5 o'clock, 4:30 hour because there was a lot of consolidation on Friday. There was a lot of consolidation going on during that time. So I'm gonna pause there because I want to make sure no one has any questions before we continue. Now remember, up here, and I don't have my lines on this one, but up here, anything above 60 and 70, the buyers are in the market. So if we were looking at this right now, it looks like this is going down to the sellers at this point at current price. The sellers are going down. This is going to be the sellers in the market. It doesn't have very much momentum. The money flow is down here. And you look at this, the sellers are moving up while the buyers are moving down. The green's moving down, the red's moving up. So all things confirmed. So you don't want to get into a trade to sell when the buyers are in the market. It makes no sense. You're going to lose money. You wait, be patient until the sellers are in the market. And then you can hop into that trade. You're going to see this consolidation. You don't want to do anything during this time. Don't do anything. Let's move back. Let's see if we can. So what I'm saying to you guys, if you cannot win on a harmonic scanner, I don't know what we can win on. I mean, these trades, you can do nothing but the harmonic scanner. Let me try something else. You can do nothing but the harmonic scanner and make money every day, all day. Every day, all day. Okay? Let's look at this one. All right. So when I said none of these things retraced, look what a harmonic scanner is telling us. This is kind of where it starts, and here's going to be the entry point. Okay? You know it's going down for a sale because you got your take profit 1, 2, and 3 below the entry point. So you could have got in here on this little bullish candle. It would have been a little more riskier, but you could have, once you start seeing this thing go down, you could have got in here, or you could have waited till it broke and closed below the blue line, and then you could have rolled it down, but you would have lost some pips. Okay. So it's kind of, for me, if I see it like a bullish candle going in a certain direction, a lot of times I just jump right in. If I feel like I'm not so sure about this one, I'll wait for confirmation. So you got the confirmation here. Now, the problem is it closed above the line for a sale, but then it came back down and came back down. As long as it's below that blue line, you would have stayed in it until it came back up and broke and closed above the blue line. Then you kind of could have got out, or you could have got out before it did that at this V right here. Boom, boom, that V. Guys, this is so easy to do. I mean, it's not complicated at all. You can make money all day, every day. You can make money on the Harmonic Scanner. All you need is these indicators. It's going to tell you exactly what it's doing. Look, right here, starting down here, and the buyers are going above the 40. The sellers were going below the 20. I mean, the buyers were going above the 20. The sellers were going below the 20. And look what was happening. The buyers were going up. Boom. Momentum was up. Look. Boom. Look how high that thing was going. Because momentum, the cash flow was up. Look at this. Look at this area right here. It's pretty, guys. This is some crazy stuff when you think about it. I don't know how to do this quite yet, but look at this area right here. I get it. There you go. Look at that area right there. Who's in the market? The buyers. The buyers have heavy momentum in the market right there. And look what's happening right here. The buyers. Look at that bullish, that real bullish move right there. They have heavy momentum in the market. Guys, the indicator is going to tell you everything you need to know. If you can't win on this simple strategy, I don't know what else to tell you. This is the easiest thing that I've ever had to do to make money. When they cross, it's going to change direction. Look, you had some sellers here. It crossed the green and blue cross, and guess what happened? It started going back up. It doesn't get much easier than that. I'm going to pause there. Questions? You can do this on TradingView.
Can you hear me?
I'm sorry?
Can you hear me?
I can.
Okay, real quick, the last indicator that you have down there, the DMI, what is that?
The DMI or the ADX, it's often called.
Oh, ADS. Okay, I got you. Okay.
You got me? Okay.
Cool.
Okay. See,
Thanks.
like, look at this. When they're close together, all three are close together, that's consolidation. You're not going to get any good trading in during this time. Look at this. See how they close together? You want some gap. You want some gap in between them. You want clear distinction that the buyers in the market are above the 20 and the sellers are below the 20 and the momentum is above the 20, or you don't want to trade in this mess. You don't want to trade in that mess. And you can go through. Now, again, you can go through any one of these scans, these charts. Guys, when I tell you, I don't know if you can see this sheet right here, but I made this sheet out. I went through probably 3 or 4 of these different platforms. I went through Forex, I went through XM, I went through JFAX. I think Christy went through TradingView. I went through a little bit of FX, and out of probably 30 different trades, I've only found 1 or 2 that hit stop loss. This was from last week. 1 or 2 of these trades that hit stop loss. Only 2 actually did a retracement at the entry. Most of them just came straight down or went straight up. This is too easy. Do we all think we can make money on this? Who doesn't think they can make money?
1,000%.
1,000%. And guys, this is the hour chart right here. So, okay, so let's say we got into this. Let's just say we got into this right here where this red candle closed, because it says it's going to come down for a sale. Let's say we waited and we said we're going to take the least riskiest trade we can take. And let's say we took this trade where this red candle closed below the blue line right here, and we got in right here. So remember, this is the hour chart. So once this closes below the blue line, because of the time frame, you can jump right in. So let's just say we got in on this one. We got in right here. And as long as below the blue line, we stayed in. And just say it stopped right there. That's 92 pips. 92 pips on one move.
Hey, Les.
Yes.
Okay, real quick. I know in the very beginning, you when you set your blue line up, I think you said the blue line was the 10.
The 10, yeah, EMA.
Okay, and then then you have a 50. Which
Yeah, the black line is just a trend line.
Gotcha.
It
Okay.
tells you where the market is trending at that time. I don't use a trend line on the 15-minute chart or the 5-minute chart because it really doesn't do me much good.
Okay.
But this is the hour chart, so I would use a trend line on the hour chart because I want to know if the market's trending down or up or whatever it's doing.
Okay.
Okay, because you can tell this is kind of, it was trending down here, kind of spiked up on a retracement, came back down, little retracement there, and it's coming down. So you already know what general direction is going in, but think about it. They also predicted that it was going to continue down on the scanner.
Right,
So
but
if
if it's above my blue line, then it went in the buy.
It went in the buy, but chances are it wasn't going to stay in that buy very long, right? And
right.
the Harmonic Scanner is telling you they're expecting for it to be a sale. Think about that. Yeah. So think about this. The Harmonic Scanner is already giving you so much information. It's giving you, hey, we expect this. We scan this entire market, and we're populating these trades that we feel pretty good about that they're going to go in the direction that we say they're going to go in. So we're going to give you that. So you already know you're looking for a sale. They're giving you the take profit 1, take profit 2, take profit 3, stop loss, entry point. Isn't that exactly what the signals groups give you? Donnie, I'm talking to you.
Oh, I'm sorry.
Isn't that what the signals group's giving you?
Let me come back. Yeah, absolutely. Yes, sir. Yes, sir.
They give you the same information. So this is giving you the same exact information. And all we're doing is we're waiting on a good entrance. Whether it's like we wait for a bullish candle coming down, we wait for it to close below the blue line, and we get it on the next candle and we ride it down. As long as it's below that blue line, we ride it down. Here's another thing you can do. Here's another thing you can do. You can draw you an angel like this, if I can do it. You can draw you a shoot. It's moving on me for some reason. I don't know why. Hold on. Another thing you can do is you can technically draw yourself. I don't know why it's moving like this. Technically, you can draw yourself a trend line. And when it breaks that trend line, you stay in that trade until along that trend line until it breaks it. And then once it breaks it, you can get out. Look at this V. Look at this V right here. It broke it right here, right? And you get out of trade because what happened? It started going back up. See that? As long as it's within, as long as it doesn't break this trend line, you can stay in that trade until it breaks a trend line, and that's another indication that it's time to get out because it's going in the other direction. So you got this trend, you got this V that happens, this sharp V. That's one confirmation that it's going in a different direction. You have this cross right here. That's another confirmation. Now remember, these are lagging just a little bit, so it's not going to be exact. But you have this cross that's telling you that, okay, look, it's getting ready to go into a buy, and the sellers are coming down, the buyers are going up. But if it breaks this trend line like it did, so if you extended this trend line out, Asia and her trend lines, as long as it was here, you was in it. All you have to do is monitor this. Boom, boom, boom. Okay, I'm good. Oh, it's riding that line. It's riding that line. And then boom, it broke it. I'm getting out. So that's an easy, quick way to even look at it and think about it. So if I go to the top of this, where this started, and I come down to where that trend line came back, stopped, and broke, 121 pips. If you did a $10 lot size, $1,200. I mean, how easy is that? This is magic, guys.
Did I? Less.
Yes.
I came in I don't know if I came in early or late. I think I came in late on this session because I think that you were put out there 9 o'clock.
Yes. No. That's 9 o'clock for the informational session.
Oh, okay. Because
Yeah.
I just kind of came in now, but I'm very intrigued, and I'll wait till 9 or I'll can't stick around till 9 to find out what's going on.
Yeah, this is being recorded too, so hopefully I'll figure out how to get it posted and you can watch it again. But guys, this is the Harmonic Scanner. If you do nothing else, but you say I'm gonna put 50 cents on every, and here's my strategy. What I like to do is just say if I'm gonna do a $5 trade on per, say I'm gonna do a $5 lot size per trade. What I'll do is I'll put $2. I'll put in 2 entries for $2, and I'll put them both at the take profit 1, and then I'll let the third one either ride to take profit 2 or take profit 3. That way you've already banked some money when it hits take profit 1. So if you got in like at the entry point, let's say if you got in right here and you have 2 positions and you ride it down to take profit 1, you've already got 49 pips times 2 times $2 each. So that's $200 that you basically already made. And then you let that third one just continue to ride. You can put a smaller lot on that. It could be $1. It could be 50 cents. But if you're doing a $5, I'd do 2, 2, and 1 and let that 1 ride down. So just say if that $1 hits, let's say if that $1 hits take profit 2, then that's $73. If it hits take profit 3, that's $121. So you made $300 something off this trade by dividing up your positions. As long as you know it's going in the direction it's supposed to go in, it's a pretty safe trade. And then if you have to move your stop loss, so just say it gets down here and your stop loss is way up here, move your stop loss. Move it to take profit 1, and then that's a risk-free trade at that point. As long as it continues down, move it. That's what I do. So when they hit take profit 1 and I got a third one riding, I automatically move that stop loss to take profit 1, because I know if nothing else, I can't lose any money on what I've already gained. I hope that makes sense. Because you might fall asleep or something. You might not even put a take profit in there. You might fall asleep and this thing starts retracing and you're not aware of it, and it retraces really fast and it hits stop loss and you just lost your. Now the other beauty of this is what I like is, look at this entry right here. This main entrance to the hospital right here. Okay? To the stop loss, that's about 23 pips. Okay? So just say if you was doing a $10 lot size, 23 pip stop loss would be $230. Okay? If you know that this is going this way and it's trending the way it's supposed to, you shouldn't have to worry about this stop loss. But if my entrance was here, just say if this came all the way back here and D was way back here, and this is where you're supposed to get in, I'm still going to wait until it get, halfway or here or whatever before I jump in this trade. So I'm going to make sure I have confirmation that it's going the right direction before I jump into that trade. So the beauty of this is you could lose, you could lose $230 if you don't wait for it to go in the right direction. But if you waited and you got into it at its lowest point, and it was a $10 lot size, then that's $1,340. So the risk is $210, but the reward could possibly be $1,340. I'll take those odds all day, but I'm gonna doggone make sure that it's going in the right direction that I want it to go in before I jump in that trade. And like I said, to be safe, wait till that candle closes and then jump in, and you still got all of this. As long as it's below that blue line, you got all of this. Guys, this stuff is exciting. I can't tell you how excited I am about it. It's good stuff.
Yeah, this is some good stuff, Les.
So I would encourage you guys, when you guys have time, just go through the old scans from this week and look at them and see which ones hit take profit 1, 2, 3. See which ones hit stop loss. And when you see that, I think I recorded 93% of about 25 trades that I looked at on the Harmonic Scanner, 93% hit profit. Let me ask you a question. If you went to Vegas and you was on the crap tables or you was on the blackjack table and the dealer came up and said, hey, Les, I just want you to know that 93% of the hands I deal you, you're going to win. they would have to drag you off the table. Right? You guys would literally be drinking coffee and taking no-dos. So you wouldn't have to get off the table. This is the same way. The harmonic scanner is the same way. It's almost a guarantee. Almost. Past profits do not guarantee future gains. Does that make sense? Guys, you guys, anything I need to go back over that you didn't understand? Because I want to be mindful of your time. Hello, hello. Anybody? Anything?
You said the light bulb come on for me.
I'm sorry?
I said you did make the light bulb on for me.
I can't, you're breaking up. It's hard for me to hear you.
What you say?
I said you were breaking up. It was hard for me to hear you. Can you say that again?
I have a bad connection. I'm sorry. Really bad connection.
Go ahead, talk. I can hear you now. Go ahead.
Hey, can you hear me?
Yes.
Okay, good. Yeah, but I definitely took away a lot.
Okay.
It made a lot more sense with just a simple V and like the two kids, you know, entering the hospital. Yeah, that made a lot more sense to me.
Yeah, I try to put it in layman's terms where anybody can really understand it, right?
Yeah, bring it all the way down to the base.
Yeah. So remember, you want this red line and this green line running away from each other. And whichever one's above the 20 and whichever one's above the 20 heading to the 40, that's the one that's in control. Whatever one's below the 20, that's the one that is not in control. And you can always look at this red line right here. This red line's above the 20. This green line is below the 20, right here. You can take this up. The red line means the buyers are in control. Okay, look down here, look down here. Look down here. Where we had our lines drawn, you will see right here, the buyers are in control. Make sense?
Yeah, definitely. When you're able to kind of bring it like a little line all the way from the top to the bottom or bottom to the top, yeah, it really registers in. Because normally you just hear, yeah, you have the 20 line or you got the 40 line, and if they cross, but you down here, I'm usually looking at, you know, the yellows and my entries and you telling me exactly where I'm going from the bottom to the top. That it clicks in for me.
Okay, great, fantastic, fantastic. This exponential 10 line is a godsend. Even if you didn't have any of this down here, once you see that candle break and close, you could have gotten to this sale right here as long as it stayed below that blue line without any of this down here. Look right here. It broke above this blue line and it went in for a sale. You could have stayed above until it broke and came back and closed and you could have got out. I mean, it don't seem like a lot, guys, in the grand scheme of things, but it's the hour chart. So you would have got in right here and you would have rolled that thing all the way up to about right there. That's still 35 pips. Okay? I mean, all money is good money. That's still 35 pips. You wouldn't even have these indicators right here to even tell you kind of when this thing is going to reverse or turn around. But that's because it's going in consolidation right now. That's a lot of that's like 8 hours for 35 pips. That's not really good efficiency. Okay? I mean, I like to like on the 15-minute chart. I mean, I want some good pips going. Like let's look at one for that's going to be kicking back in for next week. Let's look at that. Okay, this one already hit take profit. This is a 15-minute chart right here. Okay, here's a great example right here. Look. This was the entry. Oh, let me see if I can make this bigger. Okay, this was the entry right here. Okay, this one fooled us, right? It's gonna happen sometimes, but it hit take profit 1 anyway. So this one came, it went up, it closed above, and it hit take profit 1 right here. So if you had 2 positions in take profit 1, you would have hit. But if you would have tried to wait and let that take profit 2 run, it retraced back to the stop loss. Okay, so you have to be careful that you know it's going in a good a good direction and you have that momentum and it's going in a good direction for you, just hop in and hop out. Let me find another one. I think we looked at this one. I want to try to find one that's going to about to reopen on Sunday. Let's look at this one. So we look at that. That was the one we just looked at. Okay. Bear with me. Let me try to find something to help you guys out. I can't find any. But you get the, I mean, look at all of these. These all didn't even retrace, and they all hit take profit 3. This is the 15-minute chart. Okay, this started right here. This was kind of the entry point right here. It came down, it closed below. You could have jumped in you could have jumped in after this candle formed. But it stayed underneath the blue line to a take profit 3. So it took, if you got in right here, 15, it took an hour for this one to hit take profit 3 on the 15-minute chart. I mean, that's fast money right there. I just want you guys to see that you can do this on every single chart. Every single chart. Look at this one, didn't even retrace at all. This was the interest point. It didn't come all the way down to where they thought the entry was going to be. It started right here, went up, closed above the blue line, and then you rolled it up to take profit 2. See that? Boom. I mean, guys, this is, once it closes above the blue line, you jump in. Once you see this start, so just say if you got in right here, you saw it started going blue up. You got in right there, you rolled it to the top. 17 pips. 17 pips. And then you see this little V forming. That V forming started coming back down, so you know it's time to get out. So this is the 15-minute charts. 15-minute charts for me are more like scalping charts, but they'll go. I mean, don't get me wrong, they'll still go. You can still get some pips from them. But hold on. Let me show you what I'm talking about. Like this hit take profit 3, but you can see the take profits are close together on the 15-minute charts. But I mean, you're gonna still get some money off of them regardless. So don't be afraid of the 15-minute charts. I use most of the 15-minute charts, to be honest with you. And what I also like to do, here's another little tip. I like to look at these scans, and on the hour chart, I like to see if whatever has the hour and the 4 hour on the same pair. I like to trade those. So look at this. The Canadian dollar and the Japanese yen, the hour chart, a sharp. The Canadian dollar and the Japanese yen, the 4 hour chart, a sharp. So if I see a duplicate, even though it's a different hour, that tells me that the harmonic scanner feels very strongly about that pair. Okay, I'll say it again. If you see a duplicate in the 1 and 4 hour, as far as the pair, Canadian, Japanese, the sharp, Canadian, Japanese sharp, one's a 4 hour, one's a 1 hour, that tells me that the harmonic scanner feels very comfortable about this pair. So I want to pay close attention to that pair. Look, the New Zealand dollar and the Canadian dollar, New Zealand dollar, Canadian dollar, hour 4, hour 1, Gartley. That means it feels very strongly about that pattern. Now, I don't know what that pattern did. Let's go check it out and see. Look, take profit 3. See that? Take profit 3. 1 hour, it would have done the same thing. Let's check out let's see if there's any movement on this one. Okay, this one's just kind of getting started. So this will be one for Monday or Sunday when the market reopens. Okay, so let's see what it's doing. It's consolidating right now because you see all this stuff kind of together. So the cash flow is low. There's no momentum. Obviously, it's moving side to side, so there's no momentum. Look, when it has momentum, the cash flow is high. Look, boom, cash flow is high. Look, cash flow is high. Look, RSI is high. It's buyers in the market right here. Okay, I mean, this is cash flow right here. I'm sorry. Cash flow is high. The buyers are in the market. The green is above the 20. The red is below the 20. And the momentum is, man, this is a perfect setup right here. Look, this is exactly what I'm talking about. You know you got to buy when the green is above the 20, which it is, boom. The red is below the 20, which it is, boom. and the momentum line is above the 20, which it is above the 40. So the green and the momentum are both above the 40. And look, the buyers have high momentum in the market. And that's what you got right here. Boom. High momentum in the market. It tells you. Now it's starting to come down, then it's starting to consolidate, go side to side. So all of those indicators tells you exactly what you need to know, guys. Does it make sense? Easy, right?
My spidey senses are tingling.
Guys, this is almost like cheating. It's almost like you having a cheat sheet for the test. I don't know how else to explain this. We're gonna make a lot of money on this. Trust me, Monday, use these harmonic scanners. Refresh your screen right up here on your harmonic scanners. Use the scans that just came out. Wait for a good entry. Here's one that just came out. This is a brand new one. This is the Australian dollar, Canadian dollar, 15-minute sharp. Okay, this is the entry point. So it's already started coming down. Boom, boom, boom. I would say, let me put my indicator on there real quick because I want to see something. I want to see how far it is away from that. So put 10. Style. All right. You can wait till it comes down to this blue line, break it and close. But like I said, if you see a bullish, if you see this kind of come down to like right here and it's still remaining bullish, go ahead and jump in because look, this is your second entry to the hospital. Your first entry was up here. Your main interest was up here. That was the most high risk one. This is less risky. It's already started coming down. So you can jump in this trade and go ahead and ride it down. Take profit 1 or take profit 2. You in a good position here. You can wait till it crosses this blue line and closes, but then it's already close to take profit 1. Now you only have an option for take profit 2 or take profit 3. So this again, but this is the 15-minute chart too. So I mean, I would actually literally wait till it came a little bit further down before I jumped in and get whatever pips I can get off of this 15-minute if I was gonna put a take profit 1. Not a lot, 2.2 pips, take profit 2, 6 pips, take profit 3, 14 pips. So again, this is the 15-minute chart. All you're looking for is pips, no matter how many they are. And I mean, you get 3 or 4 or 5 pips. That's a good day at the office, in my opinion. Especially if you trade a $10 lot size, then you made some money. So look at the same thing let's find a new one on the 1 hour, 4 hour. Well, this one's almost hit take profit, but it has hit take profit 1. But this may still continue to come down here. You know, it may go back up. It may continue to go down here. But I wouldn't get into this one generally because it's already too far. It's kind of moved too far away already. I like them when it's close to the entry point. That's when I like to get in. So that's really all I have for now. Remember, wicks do not count as closing above or below the line. If the wick's only there, that doesn't matter. You want the whole body of the candle to close below the line, as in right here. You jump in, you stay in as long as everything stays below the line and you ride it down. Look, you would have rolled, you would have caught all of that. You got in, you closed below the line, you got in on this one, you would have rolled all of that down. Boom, 57 pips, 1 move. It stayed below the line. Remember, you could have also done what? Asia rags to riches. You could have put a trend line right here. Come on. Why is it not doing it? Hold on. Trying to show you guys here. You could have put a trend line. I don't know if you can do it. Okay, there we go. You could have put a trend line right here. Sorry, technical difficulties. All right. And until it broke that trend line, you would have stayed in that trade. Look, it's coming down. Boom, 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 boom. From here, all the way down. Boom, boom, boom. You put a trend line. It's because remember, trend lines act as support and resistance as well. as per Asia's training. So as long as it doesn't cross this line, you stay in that trade. As soon as it crosses that line, boom, you get out. Because guess what? Start going back up. Easy. How easy is that? You can do that on anyone, guys. All of them. Put yourself a trend line. When it breaks that trend line, get out. Your first indication right here was you saw this V. The second indication, you saw it break the trend line. You get out. You could have rolled that up at that point. All right, any other questions before we end the session today? Any other questions before we end today? I want you guys to understand. I want you guys to get this. There will be more trainings, but this is being recorded, so you can go back and look at it once I can get it posted. But this doesn't get any easier than this.
No questions. I just want to say I really appreciate you, Les. Thank you, sir.
Oh, no problem, man. Glad you was able to join. Hopefully this was helpful.
Absolutely.
I appreciate you. I don't know if anybody else started hearing my voice, but man, let me tell you, I am excited. I am like, I think I got it. I really think I got it.
Harmonic Scanner. We're going to chant that. Harmonic Scanner. Harmonic Scanner. That's the easiest tool I market live. That's the best tool we have.
I believe so.
When y'all talk to Dion, ask him about the Harmonic Scanner.
Yeah, that's Donnie's middle name, Harmonic Scanner.
Donnie, that's your thing too?
Man, that's my thing, boy. I love
so you already knew about everything I was telling you then.
As Courtney say, that's my bae. That's my boo.
Yeah. This is my bae, y'all. This is my bae. My bae has been almost perfect in the last week. All right. Well, if there's no other questions, we will end at this point in time. And I want to say thank you guys again for jumping on with us with 9 o'clock information. So it's time to gear up for that.
Awesome. Thank you.
All right. We'll see y'all later.